Good morning, degenerates, and welcome to another episode of Boring Crypto IO, a place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is not important. Let's go. We've got a lot to talk about today, guys. And I'm just going to this is all over the place because there's a bunch of stuff that came out over the weekend. I'm still trying to get caught up. So I'm trying to get I can't even get words out of my mouth per usual. I'm going to just kind of read the things that I thought were important with all the madness that happened over the weekend in no particular order. First, Coinbase CEO ponders banking features after Silicon Valley Bank crisis. Breaking Silicon Valley Bank UK arm acquired by HSBC for £1. USDC bounces back towards $1 peg after Fed announcement. We're not completely out of the woods yet on that one, guys. Ripple CEO assures strong financial position despite SVB collapse. US Fed announces $25 billion in funding to backstop banks. And Signature Bank closed by New York regulators citing systemic risk. So, what did we have go down? Well, we had Silvergate shut down. We had SVG collapse over the weekend. We had USDC depeg. And now we have Signature Bank shutting down. Not good. So looking at the market right now, actually when I woke up and started putting together the articles for the story, we were at 1.007 trillion. We have now pumped up to 1.013 trillion, which is, the market's moving up, which is interesting. Bitcoin dominates at 42.3%, ETH dominates 19.2%, Gwei at a whopping 22%. Bitcoin back up 8%, almost 8%, excuse me. ETH 7.46%, Tether at $1. Weird. Guess what's not at $1? USDC. Oh my goodness. Cardano up 8%. I did not get my 28-cent buy order filled. Damn it. So there's movement in the upward trajectory. Let's go ahead and look at Bitcoin. We're going to talk about this too because there's some stuff coming in the pipeline too that could also affect the price. So, local bottom, like we talked about on Friday, potentially was that 19,630. We bounced off of it, came all the way back up, and hit that 22,738 level, and then got rejected. We're trying to play in that range again right now and figure out where we're going to go. Here's the reality, guys. There's a lot of uncertainty in the market, not even just crypto, but the entire US financial world as well, with what just went down. And for me, I'm looking at it going, holy crap, what do I do? Like, where does this go? But I decided to be patient, take a step back, not panic or anything like that. That's not really in my realm of way I handle things, and just see where this goes. Let's be real. My lady and I have most of our money, our liquid, in traditional banks. So when you start seeing potential runs on banks that are as bad, or if not worse, than what happened in 2008, it gets really concerning. So again, the only idea that we really had that if there's a giant run on the banks, and if the United States financial system does start to fall apart, which is something that we've actually been talking about for quite some time between the two of us, I don't know what I would do. You could go into hard assets. I don't know if real estate's it. We talked about, maybe putting a good chunk of it in gold, and physical gold, like literally going and buying bullion and bringing it back to the house. For one reason, just mostly a hedge. Not like I expect gold to go up. Not that I think gold is this insanely amazing investment, but who knows what bank would go down next, right? And if it happened to be our bank, how unfortunate would it be if all of a sudden the government said the FDIC insurance crap is just going to be IOUs, which is what they've kind of said sometimes. And that's the fear. So it was like, what would we do? Would we go buy gold? Just in case. I mean, we'd rather have something than nothing kind of thing. So I don't know. Still trying to figure it out. But with Bitcoin right now, we're back at this range where we had this consolidation here from 22,738 back down to 21,764. Watch this range inside of here, guys. See if we can get a bottom or bounce. Actually, let's even go down further. Let's call the orange line where and we'll actually make that bigger for you guys to make it a little bit more obvious. Because of the support I'm seeing right here, I would say let's call this the bounce range of this right here. This is where if this was our local bottom, if this was just because of all of the madness that happened with these banks and whatnot, I could potentially see us ranging in this purple box for a little bit here, going sideways. So 21,592 up to 22,738, somewhere roughly in there. Ethereum looking a little bit better than Bitcoin. Pumped all the way back up past its consolidation point, which this is almost exactly, if you look at Bitcoin, the sideways movement to a small step down sideways to another small step down to sideways. Bitcoin did the same thing. Sideways, small step down, sideways, small step down, sideways before it really fell off the cliff. So we actually pumped higher on Ethereum. We pumped above the consolidation area. But I'm keeping an eye on this area to see what we're going to do. Basically swing highs and swing lows. So let's say 1621 down to potentially roughly 1524. Keep an eye on and see what it's going to do. Outside of that, guys, let's go ahead and get into the news. But yeah, weird stuff. I mean, a lot of people are saying, oh, it's no big deal, because the U.S. government has come out and said that they're already going to bail out SVG, that they're going to protect people's deposits, which is funny though, because just before that, I saw an article where Janet Yellen said that they were not going to bail it out. So I don't know what that means, man. But weird times, man. Lots of uncertainty. All right. Coinbase CEO ponders banking features after Silicon Valley Bank crisis. Coinbase CEO Brian Armstrong says the exchange has previously considered adding features to become a neobank of sorts. The wider cryptocurrency community continues to debate the ongoing fallout following the closure of 3 major American banks, with calls of neobank services for the industry on the cards. Silicon Valley Bank, SVB, which has traditionally served startups across a number of innovation industries, was shuttered by California's Department of Financial Protection and Innovation on March 10th. The reasons surrounding the closure are still coming to light, but the news caused shockwaves through the industry, primarily driven by USDC. Issuer Circle having over $3.3 billion of its $40 billion reserves locked up in the bank. They're saying that's what caused the depegging from USDC. Signature Bank, which also serves some cryptocurrency firms, followed a similar fate on March 12th. The New York Department of Financial Services, NYDFS, took possession of the bank to prevent future bank runs as customers looked to pull out funds from SVB and Signature. Again, not good, man. Yeah, I don't know. I'm kind of at a loss for words. Like I'm not as down as I sound like I am. I'm just not sure what to do. Just being honest with you guys, being completely transparent, trying to figure out what's the next move. Moving on, the closure of SVB was particularly hard-hitting as USDC stablecoins briefly lost its dollar peg, driven by major uncertainty around the effect Circle's exposure would have on the ability to manage redemption. USDC has seen its peg creep back up to the $1 mark after Circle CEO Jeremy Aller announced that the stablecoin issuer has lined up new banking partners as of March 13th in the United States. Giving the tumult of the past few days, why even use words like that? The cryptocurrency ecosystem is now taking a closer look at ties to traditional finance institutions that serve fiat currency deposits, withdrawals, and monetary flows. Coinbase CEO Brian Armstrong took to Twitter on March 13th saying that the American cryptocurrency exchange has previously considered features that could potentially bypass or serve to bridge gaps experienced in the latest mainstream banking failure. Ryan Lackey, CSO of cryptocurrency insurance firm Avertus, questioned whether the exchange had considered offering neo-banking services to high net worth individuals and businesses. Armstrong replied saying that Coinbase would need to add a number of features and open the door for comments in the thread. Definitely something we've thought about, needing a few more features like outbound wires, multi-user supports, etc. Non-fractional reserve banking is definitely looking more attractive right now. And the fact that he brought that up. So here's the issue. Fractional reserve banking basically means, if you don't know what that means, in layman's terms, means that a bank doesn't have to have cash on hand to support its deposits that it has. It just needs a fraction of it in quote unquote reserves, which is how all of our banking system works. So the reality is if everybody in the United States that has money in a bank decided to show up to that bank to pull out their money, the banks would not be able to give you your money because they don't got it. That's the reality of it. They're playing with it in the market and doing things that, making themselves money, blah, 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 and giving you dog shit returns on leaving your money in the bank and allowing them to play with it. They've been doing this for quite some time. This is the biggest problem with traditional banking, especially in the United States, but all over the world. That at any given time, if all of us decided to say, F this, we want our money out of your bank, the banks would all collapse because they don't have it. So moving on, Coinbase confirmed that it had around 240 million held in Signature Bank on March 10th, but expects to recover all of its corporate cash holdings. The closure of SVB and Signature Bank caused fears and widespread runs on regional banks across the United States over the weekend. A Bloomberg report also suggests that the United States Federal Reserve and Federal Deposits Insurance Corporation, the FDIC, are weighing up the creation of a fund to cover deposits at ailing banks. Interesting. Moving on, guys. Let me know what you think. If you're reading this or hearing this or seeing this, comments down below. Silicon Valley Bank UK arm acquired by HSBC for £1. That's a really weird number and low number. Interesting. Banking giant HSBC announced that it is acquiring Silicon Valley Bank UK for £1, $1.21. Global banking giant HSBC is coming to the rescue United Kingdom-based branch of the collapsed Silicon Valley Bank with a new acquisition. HSBC officially announced on March 13th that its subsidiary HSBC UK Bank is acquiring Silicon Valley Bank UK, SVB UK, oh my god, all the acronyms, for £1 British. As of March 10th, 2023, SVB UK had loans of around £5.5 billion, equal to $6.7 billion US dollars, and deposits of around £6.7 billion, $8.1 billion US. HSBC said in the announcement, for the financial year ending in December 31st, 2022, SVB Bank UK recorded a profit before tax of £88 million, $107 million US. SVB UK's tangible equity is expected to be around £1.4 billion, 1.7 US. Final calculations of the gain arising from the acquisition will be provided in due course, HSBC wrote, adding that the assets and liabilities of the parent companies of SVB UK are excluded from the transaction. The company added that the acquisition would be funded from existing resources and would be completed immediately. According to HSBC Group CEO Noel Quinn, the acquisition makes excellent strategic sense for HSBC's business in the United Kingdom, strengthens its commercial banking franchise, and enhances its ability to serve innovative and fast-growing firms. We welcome SVB UK's customers to HSBC and look forward to helping them grow in the UK and around the world, Quinn said, adding, SVB UK customers can continue to bank as usual, safe in the knowledge that their deposits are backed by the strength, safety, and security of HSBC. The news comes after authorities in the United States ordered SVB to shut down operations on March 10th, triggering panic in the crypto markets because of some major crypto companies like Circle and Coinbase had significant exposure to the bank. Circle, the issuer of USDC coin, the second largest stablecoin by market value, is unable to withdraw 3.3 billion of its 40 billion reserves, which we know due to collapse, signature, but expecting recovery, blah blah. Paxos, the issuer of stablecoin like Pax Dollar, USDP, and the Triple Binance USD stablecoin also had 250 million stuck in signature. Sweet, so they got hit too. Ooh. Moving on, guys. USDC bounces back from $1 peg after Fed announcement. People keep saying it's bounced back. It hasn't. I mean, I guess it hit 99 there. 99. But it really hasn't gotten back to $1, and it's now trailing down. Traditional markets haven't even opened yet. So I'm really curious to see what's going to happen when the traditional market opens. But we're not there yet. We're just under 99 cents. I think it went all the way down to... Yeah, whew. All the way down to 88 cents. That's rough. All right, let's go on with the article. Positive developments concerning Circle's $3.3 billion worth of reserves held at Silicon Valley Bank and its new banking partners have seen USDC climb back towards its dollar peg. Circle stablecoin USDC is climbing back to its $1 peg following confirmation from CEO Jeremy Allaire that its reserves are safe and the firm has new banking partners lined up at banking open tomorrow morning. We shall see. According to CoinGecko data, USDC is up 3.3% over the past 24 hours to sit at 99 cents at the time of writing. The price dropped as low as 87 cents over the weekend amid concerns about the $3.3 billion worth of USDC reserves being held at Silicon Valley Bank, which was shut down by the California Department of Financial Protection and Innovation on March 10th. Circle also has an undisclosed amount of reserves stuck at the recently bankrupted Silvergate. In a March 12th Twitter thread, Allaire praised the U.S. government and Federal Reserve for its $25 billion funding programs to support liquidity-troubled banks such as SVB. 100% of USDC reserves are also safe and secure, and we will complete our transfer for remaining SVB cash to BNY Mellon. As previously shared, liquidity operations for USDC will resume at banking open tomorrow morning. Allaire added that following the implosion of crypto-friendly Signature Bank on March 12th, Circle is no longer able to process USDC minting and redemption through Signet, and that the firm will be temporarily relying on settlements through BNY Mellon. The CEO outlined that things will move quickly in this regard, however, as he revealed that Circle is bringing on a new transaction banking partner with automated minting and redemption potentially as soon as tomorrow. The statement from Allaire and Federal Reserve announced has been followed by a significant pump for assets prices across the board, with the total crypto market cap now above $1 trillion, following its sharp drop off to $961 billion on March 11th. Assets such as Bitcoin, ETH, Cardano, Polygon, Solana have pumped a hefty 10%, 11%, 12, 11, 15 in the past 24 hours alone. Notably, this is despite Signature Bank collapsing. Signature was seen as the last crypto-friendly bank standing in the U.S. following the closure of Silvergate and SVB, and is now unclear what the major banking on and off ramps in crypto are. Yeah. I guess we'll just go back to trading ETH and BTC pairs like we were doing in 2017. All right, moving on. Ripple CEO assures strong financial position despite SVB collapse. In a short tweet thread with no specifics, Garlinghouse said the SVB situation would not disrupt daily operations. Ripple CEO Brad Garlinghouse took Twitter on March 12th to discuss the company's exposure to Silicon Valley Bank and reassured his followers of Ripple's stability. Ripple had exposure to SVB, Garlinghouse said, but we expect no disruption to our day-to-day business. And already held a majority of our USD with a broader network of banking partners. His short tweet thread was intended to reassure users, rest assured Ripple remains in a strong financial position, he tweeted. There's his tweet. Garlinghouse did not specify the amount of cash the company had at SVB. Many Twitter users responded to the thread, reacted positively to the statement. I never doubted you or at Ripple to have taken proper risk management, one user wrote. Ripple Chief Technology Officer David Schwartz had promised on March 11th that the company would release a statement on its Ripple exposure shortly, although it is not clear that the Garlinghouse tweet was what he had in mind. Hours later, the Federal Reserve announced that it had established a funding program of $25 billion to assist banks with liquidity during times of financial stress. Can we get some of that money back from Ukraine and keep our entire financial system from collapsing? That'd be great. In another announcement, Federal Reserve said that all deposits of Silicon Valley Bank would have access to all their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer, it added. Schwartz commented on March 10th, I still don't understand how a run on a bank can cause it to become insolvent. If the bank was solvent before, that means its assets exceed its obligations. They probably would have become solvent against as their 10-year treasuries matured, but they didn't get that opportunity due to a run. The price of Ripple dipped from a high of 40, rising against market trends on March 9th as a low of 35 cents. On March 12th, before recovering, Ripple's engaged in legal. We all know this. No, that's important. Okay. Look, the reality is all banks are insolvent. I always find, when we all know this. So you get all these. Yes, there's all sorts of nuances and technicalities, but the reality is all traditional banks are insolvent because they're all leveraging each other. They're all leveraging their money. They're all built on credit. They do not have the money to back themselves. They don't. It's just the way it is. And they have put us in this position. All right. U.S. Fed announces $25 billion in funding to backstop banks. Come to the rescue. Turn on that money printer again. Which is interesting, right? Before I get into the story, it's almost like this was orchestrated specifically after what's his nuts? Why can't I think of his name? Jerome Powell was basically in a hearing talking about continuing to raise interest rates and continuing to be hawkish just last week. It is intriguing that all of this stuff went down, and now the Fed is pumping $25 billion into a fund to basically bail out any bank that go insolvent. Which again, the point I'm getting at is this looks like a potentially an orchestrated idea to allow them to start printing money again, because that's what they want to do. They want to turn that money printer back on and devalue that dollar and screw us further down the road. So let's go on with the article. The Federal Reserve established a funding program for banks, making $25 billion available to eligible firms in a bid to avoid further banking liquidity issues. Hot on the heels of several United States banks' collapses, the Federal Reserve Board has announced $25 billion worth of funding aimed at backstopping banks and other depository firms. The funds would ensure that eligible banks would have enough liquidity to cover the needs of their customers during times of turmoil. On March 12th, the statement of Federal Reserve Board said it created a $25 million bank term funding program, BTFP, offering loans of up to 1 year to bank savings associations, credit unions, and other eligible depository institutions. Eligible firms must pledge U.S. Treasuries, agency debt, and mortgage-backed securities, or other qualifying assets as collateral, which will be valued at par, the price at which the assets were issued. The Fed added it would be an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. I guess there it is. It's all going to be lawyer speak, and it won't make sense to me, or I don't know. It won't make sense to me, so I'm not going to read it. It comes as Silicon Valley Bank announced on March 8th a significant sale of assets and stocks aimed at raising additional capital, which panicked depositors and triggered a run on the bank. The bank run contaminated the crypto space as stablecoin issuer Circle disclosed it had $3.3 billion in SVP, causing further panic and resulting in its stablecoin USDC losing its peg to the US dollar. The new program comes on the same day the Fed announced that U.S. Treasury Secretary Janet Yellen approved actions for the Federal Deposit Insurance Corporation, FDIC, to make SVP depositors whole, and that regulators closed New York-based Signature Bank, citing systemic risk, which is interesting because I could have sworn on either Saturday or yesterday I saw an article where Yellen said that they weren't going to bail these banks out. I guess someone told her, no, that's not the case. And breaking. Signature Bank closed by New York regulators, citing systemic risk. Last article of the day, guys. The New York-based bank, which is also known to serve a number of crypto firms, was shut down by state regulators, according to a Federal Reserve announcement. How old is this article, too? 11 hours ago. Okay. So this is just last night. New York-based Signature Bank, another crypto-friendly bank, has officially closed down and is being taken over by New York Department of Financial Services. The news was announced by Superintendent Adrian A. Harris in a March 12th statement. The New York regulator took possession of Signature Bank pursuant to Section 606 of New York banking law and appointed the U.S. Federal Deposit Insurance Corporation to handle the insurance process. The Federal Reserve explained in a March 12th statement that the decision to close the bank was made with the United States Federal Deposit Insurance Corporation, the FDIC, to protect the U.S. economy and strengthen public confidence in the banking system, which is dog shit anyways. The senior member of the United States Treasury reportedly told the press that today's actions by the NYDFS and Federal Reserve were designed to limit depositor outflows, designed to stop you from taking your money out of the bank. Interesting. And prevent additional bank runs. They're terrified, guys. They're terrified that you want to get your money. How dare you? How dare you go to a bank and claim your money that you put in a bank that they should have on hand? Weird, right? But they're allowed to take that money that you deposit into that bank and put it into the market and do whatever they want with it, play with it, and make interest and make investments and make money off of your money and give you basically 0% of that as a return. But here you are assuming the risk because if you want to take your money out, we don't want you to do that. Dog shit, guys. Fucking dog shit. The actions that we took today were designed to limit the consequences of the depositor outflows from Silicon Valley and from Signature and to reduce any spillover effects. Any spillover effects of you wanting your money out of the bank. Got it. The firms are not being bailed out. The depositors are being protected. Bullshit, said the official. The ability to keep payrolls working is really it. I'm sorry. The ability to keep payrolls working is really important, the Treasury officials added. The Federal Reserve also noted that it is backstopping all depositors of Signature Bank. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by the taxpayer. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in the manner that promotes strong and sustainable economic growth. The statement added, shareholders and certain unsecured debt holders wow. Sorry, guys, I just read that. Shareholders and certain unsecured debt holders will not be protected, though. According to the statement, the senior management has also been removed. Interesting. Signature Bank had $88.6 billion in deposits as of December 31st and was understood by some as one of the most crypto-friendly banks in the U.S. The other prominent crypto-friendly bank was Silvergate, that announced last week that it would shut down and voluntarily liquidate in light of recent industry and regulatory developments. According to some analysts, Signature Bank was able to weather the storm caused by the FTX collapse because of its depositories were much more diversified than the likes of Silvergate Bank, which only 25% of its deposits coming from crypto. Yeah, guys, I don't know, man. I don't know what to say. I'm at a lost for words. I'm really just trying to see, trying to understand and think about how far and deep this will go. But I'm not trying to be a fearmonger, but it is scary times. It is scary is kind of harsh. I would say it's concerning times. I'm really curious to see what this is going to look like when, like I said, when the traditional market opens. But yeah, I don't know, guys. I don't know. I'm really at a loss for words. I'm trying to think of something smart to say, and I'm just not feeling smart right now. All right, y'all. I'm gonna let you go. Let's Bitcoin. Yeah, still hanging out in that pocket. ETH still in that pocket. I think the market's gonna cool off. Like I said, it's gonna kind of hang around here until we see what happens when the bell rings at 9 a.m. on the East Coast. But per usual, guys, if you do enjoy the content I provide here on Boring Crypto IO, please, per usual, subscribe to the channel, turn on the bell for notifications, watch, like, and please share the videos. And be safe out there, guys. Don't panic, don't freak out, level head. And I'll keep you guys updated on anything I find out, anything new. I'll see you guys tomorrow, bright and early. I'm out of here.